Okay, can you guys confirm you can see me and see the screen I'm sharing, and always if you can hear me as well? Okay, awesome. So we're gonna start with what's happening with the calendar of invites that's happening this week. So we have PPI coming on Tuesday, but the big day why I told you guys to just be careful and hold cash is we have FOMC minutes coming in. The minutes come in at 1 o'clock. And then Powell speaks right after that. So 1:30. Again, this is EST time. 2:30 CST is when FOMC press conference happens. So Powell will be speaking. I think we are going to get in another, I'd say about 25 to 50 basis point cut. If I don't know if you guys follow Canada, they also did a 50 basis point cut. We started, I'd say about 2 months after Canada should do the same thing aggressively because the inflation is under control. It's not going higher, and I think they're going to change their goals from 2% to 3% as well. That'll probably happen now. If I think Powell will announce it. So here's what's going to happen today. We've been in a lot of trades. We're going to go over those trades. I don't really see anything outside that. If I did, I'd call it out. So we'll talk about our existing trades, what the levels are, and I'm going to talk about three key things, including when I think the next 10% pullback is happening, which, if you guys know my record, is pretty good. So I'll tell you why too. Not just give you that, but I'll tell you why too. So let me grab my notes. Okay, we're gonna start with IWM, okay? Let me see if I can close that, make it smaller. All right, I'll move it here. Okay, so I took this position. I want to show you why. Gonna Actually, I won't show you why. I'm gonna ask you guys, what do you guys see about this position? So this is the daily chart. I'm gonna show you both, and you guys start commenting what you're seeing. So, um, I saw this 231.15. So I saw this, and then I'll show you the weekly chart. You guys tell me what you're looking at. And if you don't find anything, that's okay too. And this is a weekly chart. So tell me, why do you think I would add this position? First, tell me technically, then tell me fundamentally. And I'm going to wait for you guys to tell me before I tell you why I added it. So the position is IWM. There's a lot of new people that joined today. IWM represents small caps. And then there is XOM, that's their top holding. There's also some regional banks in there. So I'm gonna see there better be more than one person replying back because this is very obvious. So what support is it? Give me the exact terms. There's a lot of people that okay. So first I'm gonna go with Kareem. He gave a fundamental reason. I need you guys to tell me what the technical reason is, because if you guys could see what I'm doing, you could replicate it. And that's sort of what the whole entire point of this is. Kareem said Fed cut rates, small cap runs. Exactly why I fundamentally added it. I think we're getting a 50 basis point cut. So that happened on Wednesday. I added half position. So if it dips, I'll add more. That's the logic behind it. Support at 230. Okay. Anyone else before I talk about it? Because this is clear as daylight why I added it. But if no one sees it, maybe I need to do more work explaining it. So if you look at the daily chart here, this looks like a double bottom. The buyers showed up a little bit early. Sometimes it's not exact. On the weekly, this was a 9 moving average touch, which is very strong, and it bounced right back up. Um, that's why technically we added it. Kareem hit the nail on the fundamental reason. Small caps, if I show you, this is what catching a falling knife looks like though. And I that's why I added half position. Catching a falling knife means when a trade is going or a stock is going down and you're trying to time the bottom. This year I've done this 3 times, and you guys can go search IWM. Every single time we've hit 1,000 to 2,000% on this trade. So I think this could happen. It's high risk though, because you're trying to time the exact bottom. 231.15 should hold. Sometimes there's a small undercut. Like undercut is when a support level breaks and everyone thinks it's going down and it just bounces back up. So I think we go back to 244 end of your Santa rally for small caps because they haven't done anything. So this is your small caps. If you start counting how many green candles, pretty much the entire month's been red. So this is what I'm watching. I added more time this time. I should have added January, but then I don't make that much. And that's the like if I added January OPEX, probably like a best case scenario 200%. Lose less, but I'd rather take a small position for December 31st, which is what I did. And so I don't expect a big move until Wednesday, where I'd like to build this position more. Okay. Small caps, if you guys are new to this thing can retrace from 233 to 244 in one single day. It doesn't move like SPX. It could have a 7% day, to be honest, if we get a rate cut. So that's the logic behind IWM. So that's trade number one. Okay, now we'll go. This is the newest, the most recent trade we added. So that's that. The second trade I want to talk about is Nasdaq inclusion. So the first part of that trade was MSTR. The initial reason for me to add this was Saylor had a meeting with Microsoft, and the idea was that Microsoft will add this on their balance sheet. When they didn't add it, the premium didn't drop. So the premium, we added this at around $580. He didn't add, which should have led to a sell-off. It didn't, and it held. So I held the position. This trade ended up going from $580 to 970. I had one contract. I did not sell it. Now it got added into Nasdaq, which I said I think two or three times. This should, in my opinion, open around 440, 450. Probably gets a little bit of a sell-off, but I believe this could do about 500 by end of the week. If this does 500, those 580 contracts will go roughly around 30. So on a small account, $580 go to about $3,000. Not bad. Like it's not like you're gonna make 100K off of this trade, but it was not a bad trade for small accounts. So it's high risk though. So call that out. So that's trade number one, but I think 440, 450 should be the opening on MSTR, and it runs now all the way into inauguration. Trade number two, part of the inclusion, was Palantir. And I'll tell you why I added this, because someone did, and I don't know if people saw what I saw. So let's just go a 5 minute and I'll show you. So this was, I believe, on a Wednesday. We had a big sell-off and then it recovered everything. And on a daily, it ended up following I'm gonna highlight the candle, a hammer. Anytime you have something like this, the stock usually has a lot of buyers, which is why I added this. So I had a pretty big order for this, did not go through. I only got in five contracts. And what I did was my fill price was $2.15, which is $215. I let that order stay because I'm like, it's gonna come back. It ended up coming back, but the lowest, I think it went to 255. I don't like to increase it. It's just not a good habit because it may have worked this time. Next thing you know, there's a big pullback and I've averaged up on a down position. So I just kept it. I think both those contracts should be up anywhere from 300 to 500% on Monday. So if you followed me on Palantir or MSTR, it should be a good payday for you. Every single week we get one of these trades and it's done really well. Um, it's not, I wouldn't say it's not luck. I don't know if it's skill. It's a lot of about watching the market for the last 5 years. You just start seeing stuff play out, and it's just a lot of it is that. I'm not gonna lie. Palantir was just an amazing technical setup. I did not know if they're gonna get added to Nasdaq. Um, I don't know at what circumstances MSTR doesn't get added to NQ. I sort of had a feeling it would get added. Someone added 1.6 million in next week 500 calls, the ones that we have, 5 minutes before close. It just makes sense. I think we see all-time high on MSTR. The bigger client, they've added 500 for January. That's $3,100 a contract. So I don't know if a lot of people would add that, but this made more sense. So these are the two trades that should open and there should be continuation. I think we get 100 on Palantir before end of year. And there's simple reason for that. If you ever think things are too high and can't go higher, I'll explain. I'll give you one odd reasoning why it will go higher. people chase. That's one. Funds need to add it before the year end. Okay. They don't want to chase it after people. And if they missed it, they're gonna add with big money, and that's why things tend to go higher. I had a one-on-one last week, and the person that I was having a conversation with, they said they added AMD. And I asked them why AMD. AMD's done really bad, could have added something else. And it's because the reasoning was AMD hasn't done anything in a year, so it's going to do it now. That's a very, very risky logic. And for that reason, why a lot of people lost a lot of money on Tesla. You wait for it to break out all moving averages. I'm going to teach you something today because I have to, because I don't want people playing laggard. Look at Nvidia, look at Marvel. We were in Marvel for a reason. So look at this. So let's add more. I'm gonna give you a simple way of doing this. So let's go now 20, 50, 100. So if you are new, especially if you're new, you want to wait. Again, these levels will change because moving averages are moving averages. I'm just saying this thing needs to get over 147 before you can go full confident. I'm gonna go on a leap on it. I'm gonna go big position. So what a lot of people are doing, let me add leap. Okay, it's down 50%, let me add more. Leaps don't mean anything. Just because you think they have time, that doesn't mean anything. They can go down 80% even if you have a year out. You don't have this is where you have to understand how options work. Time doesn't mean anything if no one's buying it. So and if people are in it, they're selling it, you're gonna get crushed. Okay? So look at this. Now look at Marvel. So logically, now, hindsight's amazing. So if you look at it, this is where you wanted to add on Marvel. No, we didn't add it there, right? So I'm just showing you that's where you want to get into AMD because people think that it's too late. It's not too late. You've got confirmation. Now I'm going to show you guys something. So this is Marvel. It's crossing all-time high, whereas everything else is lagging. This is a earning peg formation. So we broke through. Let's go add some volume. So pretty big volume that came in and broke this high. Now 118 is going to be that level that may get tested again, may not, I don't know. But I'm going to show you something that I hope doesn't cause any FOMO. 142.14 is a level I expect this to hit before year end. So what did here was we got in Marvel, we made about 150%. The minute I sold, it went another 100% from there on small account, which is going to happen. I'm showing you that's going to happen. Large account, you can trim half and hold, but I had 5 contracts on small account. So sold that. When it pulled back, I added 130 contracts. Those were around $200. If this hits 142, and let's say you have 5 contracts, so another 1,000, you will make about anywhere from $2,000 to $4,000, depending on how fast this goes. So this is a solid trade. So this is Marvel. Now, I'm gonna give you something on NVIDIA, and I want you guys to watch this. So this is where we're at right now. This is where the 20 and 50 are meeting. At some point, they're all going to meet somewhere around, I'd say around 134, 132. This is me catching a falling knife. Watch NVIDIA, a 130, 132 level. I believe that's gonna hit fairly quickly this week. I think we're gonna get a couple of red days into OPEX and money's moved to small caps. Watch this 130, 132 for a 140 call or 145 call for January, not December. This one you have to be careful because it's not shown any strength of late. Go check. See, the thing is, if I don't show you this, you guys won't believe me. Hold on, let me. So, November 21, I want you guys to read this because otherwise, I don't think. You would believe me. I'm not touching Nvidia moving forward or more. So any major, this was on November 21. So look at this. Called it at 149. Again, if I didn't show you this, you wouldn't believe me. So here, let me get where is November 21? Right here. Okay, so I think the bottom's here. Let me go show you the weekly chart. I don't know if 129 happens. I doubt that happened. That would be too easy, but 132, 134 does happen. At there, I'm looking at 140, 145 calls for January. I think December works, but I don't want more stress on for chips, but they're bottoming out. The how you look at this is, and you look at the index. I did a one-on-one the other day, so that's why this is all charted. So we were around here when I did the one-on-one, and this is what I had. And so 255 breaks, we're going to get a rotation in small caps. This happens very fast, in my opinion, and you get to this level here, all-time high, 283. But that's sort of what I'm looking for. That moving on to our core trades. One is Han. Now, I'm going to give you the logic behind how I place these. So first, let's head to Trader's Edge. So let me show you. They added on 5th of December, January 2027, 300 calls. They added 5,000 contracts for roughly 6.4. This is called an ultimate unusual volume for a name that doesn't get any flow ever. After adding 5250, they added 3,000 more contracts last week. This trade, from an investor's point of view, is going to 300. So if I was going to do stocks, it's not bad. It's about a 60-70% move, which for a lot of new people, that's a lot. For us, like we played ACHR and Joby, they did about 100% in a month, but it's low risk. I like this trade. So what I did was I added Feb contracts and then I added high risk Jan contracts, which with a wider stop. What a lot of people do, and this is where you're going to lose a lot of money, and I'm going to help you understand the logic. Just because you are small caps doesn't mean you need to find cheaper contracts, because that's what I see happening. People are like, okay, he added February contracts, they're expensive, and then he added January contracts, they're cheap. So what people do, okay, let me add Jan. Jan is high risk. You're trying to grow your account fast so you can then take bigger trades on. You're not trying to take high risk on every single trade. Do not go by the price of the premium. Go with the tolerance of risk you can afford. So I noticed that a lot of people do that. If you go look at my messaging on the January contracts, I said there is a wider stop on this. You could go back. So the February position is green and the Jan position is red. How does that make sense? The reason is theta, time. The value of time is going down. Those contracts are 250 and time is running out because this isn't going up or down, it's just going sideways. And that's when theta gets impacted the most. So if you look at the daily on this, this needs to get above 20 moving average. I was hoping we close above 228, but it isn't. We still have 30 days and I didn't add this like so give you the size of position too. If I was to on a small account add $1,000 on let's say small account on for Feb, I would add 300 on the Jan. That's how I would do it. Okay. So there is this. I believe we could see this around 244, 250 by the end of the year. So that's someone I posted 3 videos last week, and one of them was 3 stocks that I'm think can go 10x. And I said Han is one of them. And a lot of people were like, well, why are you talking about Han? I'm seeing people talking about Han too. Well, it's a quantum trade. Quantum is the next rotation. I'll show you what's not that much of a quantum trade and it's going. It's Google. This thing, after they announced, went from basically no one was talking about this trade to now everyone's looking at Google. Well, Han is a bigger trade than this. So it's just not a lot of people know about it. Okay. It's kind of like this. When crypto people will understand, when crypto starts running, early stages, Bitcoin takes the biggest leap, right? Bitcoin runs. Then as the run establishes, the altcoins start running. So now we start XPR, all the meme coins. That's what happens with this stuff too. People go for the names that they know most, then they go for stuff that's more deeper. So like Bitcoin's up, let's say 30%. Altcoins are up 5x. Same thing happens. Google's up, let's say 10%. This can go up 50%. That's the logic. So that's position number one. Second is CRM. Now, this position's gone up 20 to 30% multiple times. If you're small accounts and I keep saying that, hey guys, if you're small accounts, you could take profits here. You can, and then you can add back, no problem. This position for me is for this week. They have a big event coming, and I expect this to break this 370 range. And my target for this is 400. This is a core trade. They've added multiple position leaps September, October, November, December, big size on CRM. Let's look at daily where we at. I think this is a 9. It's sitting at 9 moving average. I believe I have a Fed position. I might add more. So it closed at 9 moving average, you can see. So I'm not really worried. Profits, losses don't really make me stressed. It's if I don't follow my plan, that's sort of where I get annoyed. So that's CRM. The next position is Tesla. So I'm gonna give you guys some idea of how we've played Tesla. We added December 300 contracts. They went about 1,000%. I took profits 1,000, and then I rolled into 400 contracts. I added a starter position on 400, and then I added a big position on 400, which I called out everything. The 400 position right now is went from 5 to 35 right now. I think they can go about 60 to 70. Some people are in the Jan position. They're already up, I think 800%. They can go about 40 to 50x on that trade. For small accounts, we've taken this trade multiple times for 200%. Now I added a 500 call, right? If you guys, and this is where if you could pick up this skill, when you're small accounts, you want to find stuff that can let you in on a expensive trade, but it's not too much. So we found something, or I found something for $200 or 220. But I want you to go check the premiums when you have a minute. Now, if you add, instead of doing November 27, add an extra week to that, the contracts go heavily priced. And there is a reason for that because a lot of people rolled out of the December contract and got into January because they're worried if there's a pullback, those contracts will go to zero. So they want some safety. And but for that one extra week, they're paying way too much. And you can do that by just watching the premiums over time, that's too much. Do you guys remember I told you that their pricing Nvidia is not going to move on AvgoBeat? Those 138 contracts, I believe, the 200 or 300% because they weren't pricing in for a beat. I don't know why, but I was pretty confident that Avgo beats, so I took Marvel. Here's the mistake I made, and this is like where I gotta get better at. I should have added some weeklies too on Marvel. Just so you know, the Marvel weeklies did 2,000%. It was a big move. That's why. Okay, so Tesla 436. Let me show you guys. There you go. We needed the monthly chart to find the all-time high is 414. Let's go daily. Um, Let me show you something. Target is 554. Now, doesn't happen right away, right? Takes time because it's a monthly, but there is going to be a big pullback sometime soon. But I think December 20th, 450 is possible, 400 is also possible, but I'm leaning towards 450 on this. Our Tesla contracts for 500, they were up around 50, 54%. You could have taken profit. This is where you decide what's your risk tolerance? I can't decide that for you. That's what you have to understand. I'll tell you when I'm buying, I'll tell you when I'm selling. I gave you guys a million time, told you like sell it if you need to. Where is it? It was 33 and there was 45 and there was I think 55 or 60% because it just ran through. I think we're gonna get a gap up on Monday and then a sell a fade. Um, so that's Tesla. I think I've covered everything where we got a time for me to talk about SPX now. Okay, so let's look at where the year started off from. I'm gonna go over when I think the next pullback's coming. So we have, let me identify. So this 29.86% is this year's performance. I think we've had two double digits, and next year is going to be another year with Trump being the president. He is supportive of businesses. I think small caps is a little bit late in the cycle. I think we're going to be looking at the rotation. When you're looking at the market and the changes that market has where you start seeing that it's starting to top, you're going to notice it doesn't happen randomly like one day that it'll stop. It happens around key dates. The key dates are we got the FOMC, so if they do the rate cuts, we should go up. Um, that stuff is obvious. The second thing is they don't do rate cuts and they actually like we're going to hold it or we're going to increase, which doesn't happen, right? The other key event is OPEX. And I'll explain what that is for all because there's a lot of new people today. And first of all, thank you so much for showing up to this morning. I know the meeting's usually in the evening. I had to move it. With the second reason is OPEX. So OPEX is where options expire for um, for three different chains. You got the weekly, they're expiring every Friday. You got the daily, they're expiring every Friday, every day. And then you've got the monthly, right? There's quad witching too, that's something else. But that date, I believe, is January 20th. You should see a window of weakness open around January 13th. From January 13th to January, I'd say 15, but I'm extending it. January 20 is somewhere where we're going to start topping off for tech. And that doesn't mean chips top two, but tech mostly in the market, SPX. You should start seeing a pullback to the, I would say, you could see anywhere from 58 to 5,500. Now, this is from a macro point of view. How you trade that is day to day when you start seeing puts. I'll give you an example. Um, One of the things that I was looking for is small caps outperforming QQQ. It didn't happen, so I was wrong. But does that mean I was in small caps trading IWM? No, I took an IWM trade the other day, got stopped at a 20%. It doesn't matter if you're right or wrong. You just have to make money. That's the goal. The goal isn't to be right every single time. So that's sort of what the date I have. I want to tell you guys and I want to caution you on three things. This has been an easy market and a lot of people are still losing money. Market starts getting a little bit tougher in January if you don't know how to play puts. I'm going to be calling out puts. I'm going to be doing all that, but I'm just saying it doesn't get this easy where the market's down, you're down 40%, you just hold it and then you're back up like Amazon. Um, Position size is key. If you don't size yourself carefully on red days, you're going to feel it and you're going to get out of all those positions. And the next day, it's going to come back up. That day, I said something along the lines, I'm happy that we got a red day. I was down 7% or something, or 17, I'm not sure. It gives you a check that are you in the right trades? Because imagine this market's down 4%, right? And your trade or let's say chips are down 4%, but your what you added is down 20%, it tells me that you're in the wrong trade. That's not good. If everything's down in here in Marvel and Marvel's all-time high and then it's up 10%. So I showed this to someone the other day. Look at this. I make this, like make a watch list. So this is for chips. Look, Nvidia down and Intel down, Marvel's the only one up. You want to be in Marvel. What are people doing? They're like, okay, What's the most down? This, let me just buy this because this is going to pop back up. And they've been doing that for the last 6 months until they lose money. You need to take the investor hat out and put the trader hat in. I don't care how much you know about a company. If it's not performing, you're going to lose a lot of money in options. So rule number one is position size. Number two is number of positions. I've failed miserably at that in the last month and I got to do a better job. I'm like counting my position as I talk to you guys before I have 9 positions. I'm guilty of that. On a $20,000 account. So I took this account from 3,000 to $20,000, I'd say about a month and a half. And I'm like now stuck at 20. My job or my goal is to get this to about 40, 50, push it there. And for that, I need to concentrate my risk. So my goal is to trim down to 4 or 5 positions by this week and hold those positions. So I'm guilty of that right now, but not done a good job. It's worked. It's an easy market, but that kind of doesn't mean that um, I get in my comfort zone because that's when things go wrong. The next is plan. If you're getting in a trade and you don't know what your stop is, what your profit taking is, when there is a pullback, you're not going to know what to do. See, you want to take profits not when you have to, but when you want to. So most people take profits when a pullback happens, right? That's what most people do. You want to take profits when the market's running. You won't be the last one leaving. Example is Marvel. I made 150%. I post a profit screenshot. It was like 120. By the time I sell, it's about 150. I sell it and I think it goes up from, I think I sold around 4 or 5. It ended up going to 6.7. So I could have made another, I'd say 2 grand if I waited another 15 to 20 minutes. Cool. That's done. Another thing. So we have a lot of new people coming in, and you guys haven't gone through my 5 day live workshop. I'm working on it. It's a lot of work to pull that through. So that's happening. That's happening soon. It's gonna be either January in or Feb start. I'm gonna release the date soon. There's something that I tell every single person to do, regardless if you're new or trading for the last 10 years. Read a book called Trading in the Zone. This is one of the best books. See, a lot of people recommend you 10 books. I'm telling you to read this book 10 times. If you're not a reader, buy it on Audible. If you don't want to pay for it, go on YouTube. It's an 8 hour recording there. It's for free. This book is going to change the way you think about trading. A lot of you are not equipped with the right mindset to start trading when you get into trading. It's the wrong mindset. See, a lot of people come in and they say, I'm going to follow this guy's call outs. He took his account from 3 to 25 or 3 to 20. It's going to work. It's not the call outs that are going to save you. And I'm going to give you an example because I want to highlight a person. Where is he? So he gave a testimonial, which was nice of him, but I'm going to just bring without telling his name. So this person started in July, and this I think we had the July challenge, the 5 day like workshop. That's where he started, and then August, and when he started trading, he had a red month. September he break even. October we started doing one-on-ones around September, October. I think he's made 11K. I think December he's gonna probably end around 10, 11. And January, I think just his Tesla call alone is gonna make him around 10 grand, in my opinion. He's not taking any of my trades. You can go check. Now, if you're part of the mentors, you can check. If you're not, then you won't know. He's taking his own trades. If now he's trying to help other people saying, hey, this is where I'm getting it. Do you know what shifted? It's his mindset. One of the things that we talked about, and this is pretty much everyone I talked to that I've lost money, including myself, is I've lost about 20K. I want to make it back up. Whatever you've lost is done, is gone. You start this chapter from now. If you keep living in the past, saying, I'm gonna first make that 20K and then go, that's where you're gonna never get out of that hindsight. So you need to forget what you've lost. You need to start from here. Anyways, I'm done with my lecture here. Everyone, make sure you read Trading in the Zone and write down the 3 lessons of options trading: position size, number of positions, and plan. If you're under 20K, which I think I wouldn't say most people in mentorship aren't, but most people outside trading are. You shouldn't have more than 4 positions. If you want to explode your account, you need to concentrate the risk that you can only do if you know what you're doing. What I mean by that is 20K means 4 position is 4K each, right? Or sorry, 5K each, right? But most people don't do that. And it's really risky. So what I do is I usually always have half cash. So let's say you do two positions, right? You don't even do four and you do 5K each. Most people can't do that because they're scared. That's too much of a position size. What I'm telling you, that's how you grow your account. I failed part two of number position of nine. I'm gonna trim that down to five. So if you have like different layers, that's still one trade because you're not micromanaging different charts. You're just looking at one or two charts. So that's sort of what the idea is. I did realize I forgot to post the flow for Friday. It never shows up on Friday, so I'm gonna post it now. Give me 5 minutes. I'm gonna upload this recording and it should be available in the next 30 minutes. That's all I got. Thank you so much for showing up. Let me know if you have any more questions. But yeah, thank you.